Okay, I want to show you how to sell a binary option in this live event. And yesterday I showed you how to do a spread to the long side. Today is to the short side. Now I'm going to repeat from yesterday the significance of both the floor and the ceiling. So first, you always have two numbers in a spread. You have a number on the left and you have a number on the right. The number on the left is always the floor. The number on the right is the ceiling. Now, the significance of those is pretty substantial because if you're going short, then the ceiling, which is the number on the right, is going to limit your risk. Is it better now, Kango? Is everybody... Oh, okay. Let me see if I can improve it a little bit. Okay. Is that better? All right. Thanks, Kango. If you're going short, okay, you need to pay attention to the number on the right because that's your risk limit, okay? For example, on the USD JPY, you can see I've got 3 different horizontal lines on my chart. Now, the blue line down here, this is what caps your profit, okay? The yellow line, and I'm going to enlarge this so you can see it, this is the ceiling price, okay? This line matches the price on the right-hand side. Then we have where I entered, which is the premium when I entered, and that is 111.18. Over on the British pound yen, you can see that the ceiling is at 144 and the entry was at 143.96. Okay, let me see if I can enlarge that some. I'm using new software, so I'm still learning it. Is that better, Kango? Okay, now, over on the British pound yen, you can see from the order box, okay, that my average price was 143.96. The ceiling was 144. So I'm going to show you how to calculate this, and it's really not hard at all. Because I went short, okay, my entry when I went short was 143.96. So I'm going to put that down here, and the ceiling price, and this is what most people don't realize, that's what's going to limit your risk. So my ceiling price is 144. I entered at 143.96. If I actually subtract my entry from the ceiling, I have $4 of risk per contract. Now notice that I'm not using the third digit, okay? The yen does not use the third digit. It has to be a full pip move, okay? A full pip would be like from '02 to '03 or '02 to '01. Okay, so on the British pound yen, I have $4 of risk per contract, and I have 5 contracts. 5 times 4 is a total risk of $20. Over on the USD JPY, I have $2 of risk because it's 111.20 minus 111.18. Okay, I have 10 contracts. 2 times 10 is 20. Okay, now please do not misunderstand. I don't know whether this market is going to go down or not. The only thing that I really wanted to see is that when you're going short, you need to short the ceiling, okay? And this is what's going to limit your risk. Now, this is what I love about the binaries, okay? When you're doing the binaries, okay, you can see this is my risk here, okay? Very small risk versus a high potential for profits because you have profits all the way down to here. Does that mean it's going to move all the way down? No, it does not, okay? But if it does, then you have really made a potential there. Do y'all understand that? Okay. Now, you don't have to stay in until expiration. You could actually go in, make your money, and then exit the position. To exit the position, all you have to do is click on your working order. Your ticket comes up, and you can actually click on the buy, okay? Right now you would be at break even. Right now you've made $1 per contract, or you can actually set a target. For example, if you believe that this will come back down to 143.82, oh, wrong market, over here, 110.98, okay, you could come down. You could say, okay, I think it will go down lower. Let's put in 110.90. Now, the one thing to consider that if you're doing this max loss and max profit will not be correct. That is only readable when you enter, no other time, okay? So I'm just going to place that order. Then we could come down. We could do the same thing on the British pound. Where do we think this will go? Okay, let's just say we expect it to go to 143.81. Again, your buy button is already highlighted for you. Okay, so you could come down to 143.80, for example. Again, this is not going to be accurate because this is the exit order, okay? So we're just going to place that order. So now you have working orders on both of your spreads. Now, some people do not like to do that because, I mean, one of the advantages of trading spreads is the fact that, you know, you have a huge potential for reward versus a very low risk scenario. I mean, if for some reason the British pound yen was to tank, I mean, you would be looking at a very big profit. From my experience, very seldom would that happen. You know, something like the Bree exit, yeah, probably. But just in the middle of the day, probably not. You typically will get a move right around noon because that's when London closes on the British pound yen. Other than that, I wouldn't have much of an expectation unless somebody tweets something that the market doesn't like. That's always a possibility nowadays. Or, you know, we just have something drastic happen that we're not anticipating. Any questions, guys? Now, one thing to remember, let's say for whatever reason you wanted to exit the British pound yen, maybe it was moving against you. If you have placed a working order, use the working order. Do not click on your open positions, because if you do, your working order remains and you will end up in another position. And that's why you don't want to do that. Now, with the yen pairs, for those of you that are new to trading Forex, the yen pairs, the true pips is 2 decimal points. So from 0.02 to 0.03 is a pip. The extra third digit is considered a half pip. On any currency that is not yen based, it is 4 decimal points. The 5th decimal point is your half pip. When you're doing spreads, it is a full pip move that equals $1. Okay, as I went over yesterday, the indices, the commodities, everything has a different tick value or a minimum move. Okay, if you go to the Nadex.com site, they give you a list of the minimum moves. On the Dow Jones, it moves in whole numbers. You know, if it goes from 10 to 11, that's a full move. Thank you, Kango Kid. If you're trading the NASDAQ, then a tick increment on Nadex is 0.1. Now, on the underlying, it's 0.25. It's a quarter. But on Nadex, it would be 0.10 or 0.1. Now, if you believe that the British pound yen will be going against you, you could always exit the position. You would save $5 to $10 right now. Your position value is always indicating to you what your position is valued at that moment of time. I do plan on doing a lot more of the live events. I'm still learning the software. But I will be doing more of these events to show you how to trade the Nadex binaries and spreads. Also going to be doing more on technical analysis and price bars. As most of you know, I love to look at price bars. I used to tell my students price bars are my higher power. They dominate anything on my chart. See if I can enlarge this. And you can see now you're getting a reversal bar to the upside, and that has 3 minutes left. In this case, you're forming a doji to the upside. If you read the article I did for Nadex News, I do believe that the British pound yen, as well as the British pound dollar, is going to have an up move later this week. I don't think it's completely set up for it, but I do think we're going to get this set up maybe into tonight, tomorrow. That's what I'm looking for anyway. They are definitely on my radar, though. And there are times we don't have a lot of market reports this week. We do have the Canadian unemployment on Friday. Sometimes I'll offset my market reports using a spread with a binary or potentially 2 spreads. I don't know if we have any available right now. Have to do 110.20, 111.20. Okay, actually this would not be a bad one to give you an example of. Okay, so this one, and this is the USD JPY, and it's at 23. Okay, so in this case you have $3 of risk. Okay, and I'm going to snap these lines because this is just making it a little bit more complex. And let me get my lines on here for you. So now in this case, I'm short here at 111.18, but I'm also long at 111.23. So this is my long price, this is my short price. The 111.20 is actually acting as both my floor and my ceiling right now. It's another way that you can actually do the binaries. And this is sort of like a straddle, if you can imagine that. Okay. What I have done is went both long and short on the spread for the USD JPY. You could do the same thing over on the British pound. The one issue that you have is you have to make sure that if you do that, that you have a low risk on both sides. Now you also have the potential for it to lose on both sides. Okay, so be aware of that. So for example, I'm going to do 5 here. It's got $7 of risk per contract. Okay, and in this case, my entry price on that side was 144.07. Now I'm showing this to you at 11:30 in the morning. Okay, probably would not want to do that in your live account. Okay, because you don't get a lot of movement during this time. Okay, but this is showing you an example, but that's also why the premiums are low, because you don't get a lot of volatility this time of the day. But the important thing is, and this is what you need to focus on, let me type up the risk on here so you can actually see it. So the short has $20 of risk total. Okay? And the long position has $30 of risk. So total on this, going both long and short, is $50. Over on the British pound, we have $20 of risk on the bottom one. And then on the top one, we have 7 times 5 is 35. So in the case of the British pound yen, we have a total risk of 55. Over on the USD, we have a total risk of 50. Again, you want to make sure that when you do something like this, that you are expecting some volatility. Okay? Will we have it right now? Doubtful. Okay? Could happen. Anything could happen with the market. Somebody could come out and tweet something about the Brexit, for example. Fox did that earlier today. They're expecting the Brexit not to have a solution until January of next year. And of course, it caused the British pound to drop. Okay? The same thing could happen right now. You know, that's always a potential to happen, especially lately in the markets. If there was, you know, something bad happen, you could see the market crash. But every day in general, no, probably won't happen. And the biggest difference, and this is the main thing to remember when you're trading the Nadex spreads, the biggest thing to remember is quite simply the spreads can vary on the payout. The binary options do not vary. It's either 0 or 100. With the spread, it's all about where the price is at expiration. And again, none of this is entered off of technical analysis. Is entered for the sole purpose of showing you if you have a bias to the short side, how to enter. And in this case, how to enter both sides, long and short. And I do quite a few of these when there's low volatility, because you can really get some low risk trades with high potential rewards. Normally I do want something like hidden divergence. It's one of my favorite patterns. You'll hear me talking about it all the time. I love counter trend trading. And when you're a counter trend trader, you really do have to limit your risk, because a lot of times the trades won't work in your favor. But when they do, they really do. Some weeks you will find are better. You might be hitting 50, 60, 70%. The next week you could be at 30%. And sometimes it's whether you're following your rules or not too. You get excited because you learned a new pattern. You're entering too soon. That happens to a lot of traders. Now, in this case, I'm going to actually remove these working orders and just let these expire. And again, I can't stress this enough. When you're doing both sides of the market, make sure that you're actually achieving, some type of volatility in the market. You could do the inverse if you're expecting a little movement, kind of like an iron condor, right? I'm not sure I follow that, Wesley. I don't do iron condors is one reason. You could go like in the money with one and out of the money with another one, maybe, is what you're talking about. Use maybe different time time frame. The only problem with using the different time frame with this, and I'll show you. Okay, we have the 1 p.m. Okay. Let's go to the noon. You really don't have any at the noon that you would want to do. That would be $12 of risk. This, you could do 143.88, but you already have a better one than that. Let's look at the daily. This is where I think what you're talking about, Wesley, where you could come out to the daily and you could potentially get that for $3. Okay. So let's say, okay, this is moving down, but just to cover that, we didn't have this long position here. Okay. So I'm going to exit this one first so I can show you. Okay. You could say, okay, I'm going to buy this one. And that way, I think this is what you're actually talking about. Except normally you would want your directional, which in this case is the +1 on the British pound. That would be to the short side. And then for the 2 hour, it would be the opposite of that, if that makes sense to you, Wesley. I think that's what you're talking about doing. Does that make sense to you, Wesley? Let's see if I can find another one to do, and I can pretty much show you. Yeah, I don't see any on Forex. Let's go to the indices and see if I can find one on the Wall Street. Let me refresh this. Wall Street. Okay, the Wall Street's been moving up all day. Okay, so let's just go and look at a chart on Wall Street. Okay. So right now the Wall Street is trading at 25,620. Okay. So let's go into the binaries and see what they have for the daily. 25,6. Okay, the only one that I can find that's even close is the 631. So that has $81 loss and a 219 potential profit. Okay, well, now it's 79. So I'm going to enter that one. Do you see how this is for the daily? So that's 4.5 hours. Now, just in case it goes against me, I want to find one that would be low risk, number one, but would cover me in case it goes against me. So in this case, the only one available would be the 25,550 to 25,650. it has $30 of risk versus 70 in profit, but that's okay. I'm just using it to cover. Does that make sense? So my directional is to the upside. Okay, that's my directional. Okay, and there is risk involved, but just in case we have one to the short side, in case it goes against me. Now, you may not recoup the entire risk that you have on the daily, but losing even half the amount's better than losing all of it. So you can see right now, and I think this is what you're talking about, okay, on my short, which is my short term, I've got $1 of profit versus $8 loss on the other side. And because these are offered every 2 hours, it's feasible to do a lot to cover your position doing exactly that. For example, you're going to have another one that opens up in about 13 minutes. It's going to go from 12 to 2. You also have a secondary daily. Sometimes you can get a better option there. Okay? So in this case, you have more risk on that, but let's say you think it might go 120 points down, you could always do this one. Another good strategy to use with that one, Wesley, is to look at the open, high, low, and close of the previous day. A lot of times they come back to those numbers. So you wait until it gets to an extreme and then it comes back to that number. Yeah, there's so many different strategies that traders use. A lot of people want to say it's the same strategy, but it's not. As a trader, we use anything that we can. Okay, on this one, I'm going to put in an indicator real quick that will show you if I can find it. And this is just based on the previous day. Yeah. Now what I want you to see is, do you see how this came back to the high yesterday? Here. And then it drops down, it comes back to test it again here. This could have been a daily spread using a simple technique like that. Because that's what it's always doing. It's always going back and testing previous areas. What you don't want to do is use this type of technique when you're in a congestion area and you have a very small congestion area. That's when you definitely don't want to use it. And I'll show you an example of that too. Do you see on this one you have an ATR at 28.94, and then you have the white dots at 28.77? That's not enough room to make a profit. You don't want to trade a spread when you have a very, very small congestion area like that. Not unless it's been testing it for a period of time. If any one of you were joined in on the Nadex Bull Binary Option Hour this morning, we were talking about we like to see it test and consolidate. And when I see them testing and consolidating, I'll sit and wait. And I've been known to wait 2 days for a trade to come off of that consolidation area. Because when it breaks out, it's going to be a major breakout. We're not talking about a small breakout, but a major breakout. That's when you would trade a spread. If you've seen the videos that I've done on the bear traps, bull traps, those are great areas to do spreads. Not necessarily on a 2 hour, okay? But if you can find those on like a 60-minute, 120-minute, they're fabulous. They really are. They're worth the wait, I'll put it that way. These little ones that are on the 15-minute chart, typically I'll use the binaries for those. But on the bigger time frames, I move up to the spreads. It's a higher reward potential. The other one I love to use them on is the Canadian rate announcement, which we don't have anytime soon. But Friday, they have their unemployment. That will be a good one to use on the unemployment as well. Because that thing really moves on the Canadian. And you can really mix and match the spreads and the binaries. They do really well. You know, for example, let's say that we didn't have the spread up here to the long side. We could always come over and do an out of the money binary on it. Choose, let's say, the 1 p.m. Okay. Price is currently trading at 111.17. You know, you could come back and say, well, just in case, I'll do 111.26, which is a 10 pip. Now, this is your issue, and this is what you have to think about. Is there enough volatility right now for that to move 10 pips? Okay. In 6 minutes, you're going into lunchtime. Could it move 10 pips? Yes, it could. Is it likely? Probably not. And sometimes I have even done, you know, like 10 minutes before expiration. For example, come in on one at noon. Okay, so it's at 18. You've got 22 available for $9. If I think there's a potential for that to move up, I'll actually come in here and do it for $9. What does it have to move? Well, right now it's at 17. The strike is at 22. So you've got 5 pips. Could it move 5 pips in 6 minutes? The yen could. What do you typically want to see for that? Hidden divergence would be ideal, or trend divergence. Both of those are ideal for that scenario. Same thing like over on the British pound yen. You know, you come in on the British pound yen, choose the noon expiration. You know, if it goes up to 17, which is 10 pips, I mean, you're looking at making $90 on that, right at $90. And I have done these. Now, normally, again, I want to see some type of divergence before I enter that, which means you're not going to get a lot of those. But when you do, they're worth the risk. Does everybody understand that? It's not going to happen every day, don't worry. It's going to be few and far between that one will actually set up at exactly the right moment. And that's what you need. Something to set up exactly at the right moment with a very low risk. Do I think it's safer to do spreads over the regular, like binaries, Michael? I think it depends on the way the market's moving. A lot of times, if there's no volatility, you know, I'm probably going to go with a cheap binary. Because again, the core to trading spreads is getting that volatility. And, you know, sometimes it's just a matter of, okay, everybody knows I'm trading risk to reward, okay? When you're getting, you know, like today, we have like $2 of risk on some of these trades, and it has 2 hours to move. Okay, I'm not even going to think about that one. We could have taken a 1-to-1 risk to reward ratio on that at least 5 times today that I've seen it hit 20. You know, the problem is that, you know, that's going to cover your exchange fees, and you're not going to have a profit. So you also have to calculate that in. Generally, when I do these cheap binaries like you just saw me do on the British pound yen, normally I limit those to currencies that do move a lot. Yes, I do. Wesley was asking, do I ever do spreads overnight? Do a set and forget it? I'll do both binaries and spreads overnight. But again, you know, it depends on your setup. The ones that I really don't like would be like on a Sunday night, I'll sit and watch the market. A lot of times Sunday nights will it's one of two ways. Either it absolutely does not move at all, or you'll get some good movement in there. And when you get really good movement in there, then I'll go ahead and trade. Otherwise, I tend to wait until, you know, Monday night into Tuesday before I even think about taking a trade. Because a lot of traders come in, you know, Sundays and Mondays and saying, okay, which way are we going to go? You know, and you have to let them decide, and then you're just trying to go in with them or in the flow of the market. And I'll also tell you, I do not choose high risk scenarios. I know some of you have seen the deep in the money trades. I don't do them because mathematically they don't make sense to me. You know, it's really just that simple. They just don't make sense to me. I believe in numbers. I trade numbers. And I have losing trades. Losing trades themselves do not bother me as long as I can keep my risk to reward ratio high. And my average is between 1.5 and 2. So that builds in those losing trades, so I don't worry about them. And I do not mind taking profits. I generally do not worry about where it went after I exit a position, because this is where you have to remember what is your job as a trader. Job as a trader is to take profits. I could care less what it does after I exit. It just not even on my radar. Yeah, most of the time I trade during London. Of course, most of Europe is on vacation this month, which is why you're seeing me more during the U.S. session. I do like the afternoon session because you can get some really good deals on binaries and spreads during the afternoon session. Simply because it's a slower market. I am getting a little bit better with this new software that I'm using on the live events. Just got to figure out how to end the live broadcast. For some reason it's not ending it when I end. It just keeps on going. It's like the Energizer battery. Any other questions on combining the binaries with the spreads? any questions on binaries in general. They are my favorite thing, so if you have a question, please ask. Okay, if there's no other questions, I'm going to go ahead and end the live event. At least I hope I can. I thank all of you for joining me today. If you have any questions, please feel free to email me at gm@tradershelpdesk.com.